So Friday was a tough day for the market. Looks like just like us, market is also confused, not sure which direction will it go in the next few weeks, and also all our favorite stocks are moving in the opposite direction. But this type of market movement gives us investors a chance to build our positions. While our portfolio may not be speaking the same language as I am, but just hang in till the end of the video and I will show you how things are about to get very interesting. So over the past week, I got to do some more research and look beyond what market are telling us today. So in this video, I'm going to talk about when market drops like this, what are few things we can do to make sense of what's coming next. And also, as a gentle reminder, if you like content like this, then please give it a thumbs up and consider subscribing. So without any delay, let's start talking about VIX, a short form of Chicago Board Options Exchange. So the volatility index or VIX is one of the tools that basically market takes in consideration for the market sentiment. For traders, the VIX not only represents a useful tool for assessing risk, but also opportunity to capitalize on the market crash, if you want to call it. The special thing about VIX that it's forward-looking. That means it shows the IV of S&P 500 for the next 30 days. So let me break it down further. So for us to understand VIX, this is how we measure it. The VIX is calculated using the prices of S&P index option, and it is expressed as a percent data. So if VIX value increases, it's likely that the S&P 500 is falling, and if VIX value declines, that means the S&P 500 is likely to experience stability. While the VIX only measures S&P 500, it is actually commonly used as a benchmark for the entire US stock market. Now we know that when VIX increases, the market is going to fall, and when VIX decreases, the market is going to go up in a way or stabilize. So VIX moves opposite on how the market is moving, which is kind of awesome for us to decide when to enter value trades for general market. So Friday, as I just mentioned before, we all know was a major red day in the market, and the new COVID strain and also the crazy China tech crackdown. So take a look here at this chart. VIX index went up over 25 right here, as you can see. I'm going to enlarge it. Over 25 for the first time since September. Now, how does this relate to actual market? Let's take a look at this other data, and just as a warning, this will look like a setup. Really, the chart looks like it's kind of a setup, and you're going to get a lot of information in this video. So please consider giving it a thumbs up and consider subscribing if you enjoy content like this. And if you like to take the conversations further, then consider joining our Patreon, where I share these kind of first-hand information as soon as the data is available to me. For example, I talked about how Friday was a good day for value companies, and also when crypto dipped, I sent an alert that I'm buying few Ethereums. So stuff like that is always mentioned in the Patreon. Consider joining if you like stuff like this. Okay, so now let's start with the volatility chart, and then we will look into inflow, outflow of S&P 500, and then I will share SPY chart to put it all in perspective, and then I will share Google and Apple chart to show you how closely it follows. This is going to get really interesting. So let's start with first just the VIX index for last 1 year. As you can see, February to October, and you see these spikes. Just remember these spikes. 1, 2, 3 were the major spikes, and then we had some spikes in between as well that I'm going to mention. So this is in detail the chart of VIX right here. So this was January mid right here. As you can see, the VIX spiked like crazy when we had that huge run up in January. And then we can see that towards February end, March beginning, the VIX spiked again, and then May VIX spiked again, and then July VIX spiked again, and then September went over 25, and then now November went over 25. So I'm going to actually label this as 1, 2, 3, 4 anytime the VIX has gone over 25, because I'm going to put it in all perspective. So this was 1 right here, and this is 25 right here. This line, I'm going to actually make it right here. This line that you see, this is 25. So now I'm going to measure, or I'm going to mention here as 2 right here, 3, 4, and 5. So as you can see over here, over 25 in last 1 year, we have gone up 5 times. Now I'm going to show you a chart which basically shows you the inflow and outflow of S&P 500 right here. So the bar that you see going up, this is the inflow. That means money is coming in. And then the outflow is the bar that's going down. That means people are cashing out or taking their money out. Now put it all in perspective. So as you can see, when we had that first spike in January, money came in right here, as you can see. Because remember, this was also measured right here as above 25, but I'm going to start from here because this was after January right here. So as you can see, as soon as the value of VIX went up 25, we had new money coming in. And then when the value of VIX dropped, people had cashing out again, because when the market stabilized or when S&P 500, remember, this is opposite. So when this is going up right here, the market is going down. And when this is going down, the market is going up. So when this went up, that means the market crashed. In a way, I'm going to call it crash, not necessarily crash, but we can see that there was a sell-off in the market. All of a sudden, the traders and investors came in and they put new money in the market buying options. As soon as the market stabilized, which is right here, you can see that people started to take profit here or started to sell and get out. Then when VIX went up 25 again, as you can see, we had new money coming out right here. And then when it stabilized, we can see that people started to take money out. As soon as it spiked over here, people started to put new money in. It's just funny how it works. If you see, pay attention to this right here. See this? This is going down. People are taking money out. As soon as it spiked, there is new money coming in right here. And it has kind of followed this like a clock. Anytime when the VIX has gone up, look at this big, huge run up that has come up right here. So anytime it has gone up to 25, because that's what we are measuring. But you can see there was a spike all around. But as soon as it has gone to 25 or higher than 25, that's number 3, we see this new money coming in. And then when the market stabilizes, we see the money going out again. And then same thing happened over here on the number 4. As soon as towards the, I would say, beginning of September or middle of September, when the VIX went up 24, we see this new money coming in. And when the VIX stabilized, we can see this money going out. And now this is what happened. We have gone above 25 after September for the first time, and you can see this data is not yet available, but next week I bet you this graph is going to look like this over here. That means a lot of people came in and bought options and bought into the market, and when the market was stabilized right here, a lot of people were taking profit or money was going out of S&P 500. This is really interesting because if you just look at this chart, you can see as any time when the VIX has crossed 25, the money has actually came in the market in bulk, and then as soon as it has stabilized like this right here, the money has gone out more. Of course, anytime it spikes, people come in and buy the options, and then when it kind of stabilizes, people kind of cash out. So this has been the I would say the story of VIX and S&P inflow and outflow. Now let's take a look at SPY chart right here. So as you can see, this is the chart of S&P 500 as measured on a chart, and I will actually show you enough so you see the comparison I'm making here. So look at this right here. So when we know in January, and this is actually right here is the 2021, started January, February, March. So this is what we are measuring. And as you can see right here on the first one towards January mid, when S&P or when VIX kind of went up, we can see that right here the market fell. And then you follow the trend, and 1, 2, 3, 4 that I have labeled right here. Anytime VIX has gone up, market has actually gone down right here. 1, 2, 3, 4. So we started over here, 1, 2, and then I think 3 was right here, 3, and then 4 was right here, and then now we are in 5 over here. So S&P has kind of followed that VIX trend. Anytime the VIX has gone up, the S&P has gone down, as we all know. This is now related to both, I would say, I only picked Google and Apple as the benchmark companies, but you can actually plot this on any company chart. If the company does not have a catalyst going on, if the company is doing the regular business as they're doing, you can see this chart follows so well to S&P 500. Also for VIX. Anytime the VIX has gone up, the equity has fallen right here. So as you can see, the VIX went up towards the January end in February, Google fell. Then the VIX kind of went up again, Google fell. And then as you can see, the VIX went up again, Google fell. And then now on number 5, when VIX went up 25, Google fell. But look at the trend, that's what's going on here. Even though the commodity or the equity or the market is falling, the stock or the equity has gone up overall. So is S&P 500. Even though we had those dips right here, but we have seen S&P continuously climb and making new higher highs. And that's why this whole thing is very interesting and an opportunity for us investors to go in the market when the market is fearful. And that's the whole point of me making this video and telling you that this VIX right here is temporary. Look, anytime it has gone up because the stock market has fallen, it has came down and the stock market has gone up. And that's the whole point of basically taking advantage of these red days. Anytime a market falls, and we can see right here, the VIX has gone up 25, it's an opportunity for me to buy into options, to buy into value companies, and basically make my portfolio even stronger. Now, I'm not saying that the VIX is not going to go up any further. Right now, it's 25, or it's 28 actually. When I recorded this video right here, it has gone up to 25. Friday was 25 something, and then over the weekend, as you can see over here, this is 28.62. So I'm not saying the VIX is going to stop here. It can go as high as it went in January right here, about 35 to 40 in between that. But I would say it's going to happen for a few weeks, and then market is going to settle down. It's going to swallow that COVID news, strain news well, and we can find out that, okay, this is not such a big deal. Just this morning, I read an article on Bloomberg that now South African health officials are saying that the strain is not that big of a deal and it's mild, and it could be controlled with vaccine. Again, this is all a theory right now. Nobody knows for a fact, and health officials are working very aggressively to find out. But what's going to happen when they find out that the vaccines are kind of effective for this new strain? The market is going to stabilize, S&P is going to go up, and VIX is going to come down. So these are the things that you need to look at when we are measuring how the market sentiment is, or how this market crash or market sell-off is. Is it long term? Is it a bear market? Or is it short term that's going to last a week, 2 weeks maybe, and then things will start to come up? And this is the time to kind of make your portfolio stronger or add to more value plays. So on Friday, when I was looking at all this VIX data, I kind of put a buy order for VIX puts, where I'm basically saying that the VIX is going to come down in the next few months. It's going to come down in the next few weeks, but I went out as much as March of 2022 and I bought $20 VIX put, and I'm going to just leave it. And when the VIX comes down, my put is going to be expensive, and of course I can sell it for higher than what I paid for it. And that's the whole point. You want to buy less and you want to sell high. But I added few more on my value plays. As I mentioned, Apple, Google, Amazon, you know these companies. These are all very well established companies, and a major red day is nothing but an opportunity to buy more in these companies. So did you see that sometimes market gives you these opportunities to take advantage of fear and also build your portfolio? Now, this only takes place if you have not bought into FOMO, which I completely understand is very hard to control, because when things are going up, we think they will never come down. And when things are going down, we think they will never come up. Just human psychology. And it took me years to get excited about red days. And yes, I am more excited about red days than I am on green, because then you have a much harder question in front of you, and that is, when do you sell? Which is a lot harder than deciding when to buy. Trust me, I have been on it many times, and it's always a hard question. Should I sell now or should I wait? Versus buying a major red day, I'm buying in. I hope I was able to provide you some value and share a few things that I learned over the years. If you got anything out of this video, then please give it a thumbs up and consider subscribing so you don't miss on future videos. And if you want to take this and many more conversations further, then join our Patreon. We just started the group and our family is already growing and have some amazing conversations. I'm just surprised and actually humbled by the knowledge we share on Discord. Thank you for being here and listening to me. Until next time, you all have a sparkling day.